Welcome. I'm Victoria Schneps-Eunice, the publisher of The Home Reporter, The Brooklyn Spectator, The Spectator News, and I am delighted to have you with me today, and our special guests. So we have the special experts on how to get a mortgage for your house and how to do a reverse mortgage. So we're going to have a lot to learn here today. And I'm delighted to be able to introduce you to Donald Camella.
Hello.
How are you? And Emmanuel Katekis.
Hello,
Welcome.
how are you?
Welcome. We're so happy
Thank
that
you.
you were able to join us. And I know that the laws have changed with reverse mortgages, and all of a sudden they become more viable for people to use. So I'm going to ask you first, Manuel, how did you get into this business to begin with?
Well, actually, I was still in college, and I went into the investment banking part of finance.
Okay.
So after 7, 8 years, I realized I want to go into the lending part of the business.
Did you work for a bank? Or
Yes, I did. I worked for a bank called Continental in the beginning.
Okay.
And through transitions, buyouts, and other mergers, I ended up with United Mortgage.
So is that a company that you work for, that you started, or what is the history of United Mortgage?
United Mortgage has been around for close to 30 years, but it really picked up probably around 5 years ago when myself, Donald Camella, and a few other key components in that bank.
The young energy.
The young energy, exactly.
All right.
Because with all the products that they have and what we can do. We had a very successful team, so we were able to take it to the next level.
Okay. So, and you, how did you get interested in this field?
Well, straight out of college, I got into the business because I wanted
Where
to
did you
help
go to
people
school?
find their homes. I went to Lynn University in Boca Raton, Florida.
Oh, that sounds like a very nice place to go to school.
Yes, it was a very nice place. Good sun, good energy there. And then just wanted to, help people out with financing, save money on their house, purchase homes, and.
Okay. So in terms of your getting into this whole world of finance, what is it that you see happening now? Do you see that the market is picking up, that there are more opportunities, people are buying again? I mean, because after '08, things kind of stalled.
Yeah, during 2007 and early 2008, things was put in the back burner. Rates were still low, but the feeling and the attitude out of purchasing homes was very meek, obviously. With prices going down, people were more stressed about their own values and not really realizing that those values that are becoming gives them an opportunity to buy homes. And then late 2008 to 2009, that's when you started seeing more purchases, little by little. First in the single digits, under 10%, and after that, we're in the 26% now for new-time home buyers.
So when you see the kind of changes, you're in the business how many years now in the mortgage business?
In the mortgage business for 13 years, but in financial for 21 years, yeah.
And you? How long are you in the company doing
I've been in the
mortgages?
mortgage business 12 years now.
Okay, so you guys have a nice perspective. It's been over the few years that you are, in fact, seeing what they call the housing cycle.
Correct, the peaks and troughs.
Right, okay. So, where are we now? Where do we sit with this?
Well, right now, I think we're right in the beginning of another rally for the purchase market. It started, like I said, in 2009, and now people are feeling a bit more comfortable. Rates are near the 50-year lows.
50-year lows?
50-year lows, and the sentiment right now is pretty great.
So they're throwing the money at you. Well,
Correct.
With the first-time home buyer, how does it work? How do you help people? Because sometimes that first house is the hardest one to get mortgaged.
Well, first-time home buyers have a lot of great opportunities with the conventional and the FHA programs. Fannie Mae and Freddie Mac both have, products where you could purchase homes through them without putting money down, very little money down. Some programs are on the VA side. If
Is
you're a
everyone
veteran,
hearing
you don't
that
have
loud
to put
and
money
clear?
down.
No money down. There's an opportunity. Do you have to have super credit?
No, not at all. If you're a veteran, you don't have to put any money down.
Wow.
On the FHA side, you only have to put about 3.5% down.
Oh,
You don't have to have
my.
excellent credit. There, you could finance multi-unit properties with only 3.5 down too. So you
So
can
you
have
can
people
actually
rent
buy
it
a
out, paying
multifamily
your
house.
mortgage.
You can live in it. You have to live in it. It's not as an investment property, I assume.
Those would
Correct.
have to be owner-occupied properties, correct?
Okay, and then potentially get the income from the 2 other apartments to support the mortgage totally.
Exactly.
We're seeing more and more of that now. What we're noticing is people want to buy homes, obviously, but they're looking for that, you know, multifamily to get some residual income.
Yes.
But like we're telling our clients, you know, you can buy a $500,000 home. The average rent these days is $2,700
No.
per month in New York, in the
Really?
5 boroughs. That's the average rent in New York right now.
That's very high.
Correct. So with that type of mortgage, with that type of rent payment, it's basically a mortgage payment now for a $500,000 loan.
You know, that's a remarkable thing. So, in other words, the no to almost 3% down, has that helped you be able to do many more deals?
Yes.
Certainly.
Yeah. And then when you were doing those deals, what happens in terms of the process? How long does it take? Let's say I see a house today and I put in a bid and the bid is accepted. Then I go looking for a mortgage to be able to support it, right?
Correct.
What's the process?
Donald?
The process would be, first we pre-approve you. So you'd come to us, whether you found the home you want to buy, or you want to go to a realtor and tell them, you know, here's where I'm pre-approved up to find the home. So once you go into contract, that's when we start processing your application. And at our bank, it's a quick approval process.
What do you define
our-
as quick? How many
well,
days, months?
From the moment we have your file in, we're at about today a 72-hour turnaround time for underwriting. So an underwriter will look at your application from within 72 hours from when we submit the file.
Oh my. And then what's the next step?
Well, we usually take a very complete, you know, documentation from the client when we put the application in.
For the underwriting.
Right, but there's things that will hold it up. I mean, title is one thing. We got to get your title, then review it, make sure it's a clean title.
Mm-hmm.
So that could be on purchases. I find title is the biggest holdup sometimes. You know, whether something needs a CO or there's not open permits, violations on the property. Those are really the main holdups. Bank underwriting, really, on the borrower's end, it's just as quick as they get us the documentation that we require.
So what are we looking at from the point of they have been submitted to the underwriter? How long does it take before that mortgage is complete?
Well, with title, for all the searches that are required on a purchase, those could take up to 2 weeks to receive a full title.
Okay.
Once the title's in, our legal department will review the file within about 24 hours.
Okay.
So if we have a clean, clear title right there, we'll clear title, and then it's just the underwriting, you know, stipulations on the documentation required.
So give
From
me
the
a
borrower.
time frame.
Well, I can step in here. The timeframes will vary, but I've closed a purchase within 7 days. But that was a different scenario. For instance, we get a lot of loans that they go to other lenders.
Give me an example when you say other lenders.
Other lenders, the big box names. You're talking about Wells, Chase,
go to
Citibank,
the
Bank
other
of
bank.
America.
They go to-
Correct, of
right.
course. But the problem is when you're dealing with a larger institution, they have something what's called overlays. These overlays are put into small in the circle for their target area, their target consumer. What we do differently here at United Mortgage is basically we sell to the 3 government entities, Fannie Mae, Freddie Mac, and Ginnie Mae. Those are the only 3, and we're registered all 3. We're actually one of only 3-4 banks on the East Coast that has all 3 government entities. So that being said, is when other lenders can't do it, I can receive a full package from a denied loan. That means appraisals in, titles in, and all the income docs, and I've closed it within 7 days. But on average, it takes around 3 to 4 weeks, average,
Okay.
purchasing a home.
So, I mean, I think that's reasonable. Most people are, you know, understanding that who are selling their house, you know.
Correct.
So I think that they are enabled to, you know,
Believe it
get
or not,
done.
sometimes the sellers hold up on the most part, because when it comes to title, like Donald was saying, there might be a violation on there. We're looking out for the best interests of our borrower. You know, when they're buying a home, we want to make sure everything's crystal clear for them, and when they're in the home, they have no stress, no worries. to
Well,
follow them.
talking about no stress, no worries, I know that reverse mortgages were kind of in favor, then they were out of favor, and now they're coming back to favor. Who would be eligible, and what is a reverse mortgage? Why don't you share that with us, Emmanuel?
A reverse mortgage is for any individual who's older than 62 years old.
Okay.
It's a very favorable product. It's helped so many individuals out there. The best part is when you help someone who's in foreclosure, back taxes, and they owe a small amount, and they just don't have the means to collect all those funds. And you can save them out of that situation. And on top of that, you may be able to have no mortgage payments. All you're just liable is for your taxes and insurance. Basically, your home's working for you. You're working on your home. Your home's working for you.
But explain that a little more about what happens when you are given this reverse mortgage. Do you no longer own the house? Does the
No,
mortgage company own
absolutely.
the house?
No. You remain on title. The individual owns the home. There's no other secrets. The bank does not own the home. You are full rights. And in fact, when the time comes and there are no individual borrowers left for the property, the siblings or the kids have full right to the home.
So when you are talking about that reverse mortgage, does that mean that you are able to do something different than if you were to get a home equity loan?
Absolutely.
What's the difference between the two?
When you're doing a home equity line of credit, you're using a percentage of your home, and it consists of an interest rate that you have to make payments on. When you're doing a reverse mortgage, you're using the equity of your home to pay yourself or pay any liens or give yourself some cash. And instead of making mortgage payments, the interest gets tagged on to the loan. So that's the difference. It's one, you're paying for a mortgage. The other one is that you have no payments except for your tax and your insurance.
Sounds like something that's very viable. Have you been doing many of those?
We do a lot of reverse mortgages here at United, and the homeowners definitely benefit from the opportunity to get out of a situation where they're living in a home that they can't afford, and then they could live in their home that they lived all their lives and live comfortably without having to make the stressful mortgage payment with, obviously the increased cost of living that's going on here.
So explain to me, if I have a house, I guess it has to be worth a certain amount. Let's say it's worth
Correct.
$300,000. And I own that house with a mortgage of, let's say, $150,000, 50%.
Mm-hmm.
How can I do a reverse mortgage? Would it be on just the value of what the house is, or would it be?
There's many factors to this. The two main ones are age and the value of your home.
Okay, so
So
give
it's
me an example
it's
of
done by
that.
actuaries. For instance,
Right.
an 82-year-old will be able to leverage more off their home than a 62-year-old.
Mm-hmm.
So that's how it works. And obviously, you'll be able to use more of what we call loan to value. For instance, a 62, let's just say, argument's sake, I don't have my mortgage calculator out here, no, my
Right.
reverse calculator.
Right.
A 62-year-old will be able to take out 55% of their home.
Okay,
An
so
82 might be
that-
as high as 65.
Now, 55% of their
Value-
mortgage, or
value
what
of
the
the home.
appraised value of the home,
Correct.
no matter
The
what the
appraised
mortgage
value.
is.
Appraised
It
value
is.
of the home, correct.
Okay, I'm
Correct.
just trying to understand this because
Yes.
this is really a great opportunity if you're in a situation where you have need for that money
Mm-hmm.
and you're sitting on something as a valuable asset.
Correct.
Yes.
Correct.
So I think, this is really something that is sometimes a little complicated to understand, but what have they done lately to protect people? Because there was some changes that the government put in place.
Yes, changes have in effect, and now they're making another change as of Monday.
Oh,
Reverses usually, in fact, most of them don't require any type of income verification. As of Monday, they'll start processing with income verification. So there is another big change coming in the reverse market.
why do you think that was put in place?
Well, there's many reasons. They want to make sure that when they're lending money to an individual, they have the means of paying back their taxes, their insurance, and the cost of living. It's protection on everybody, the borrower and also the bank on both sides.
I could see that.
Yes.
And you guys are very busy. You say we were talking about getting fit and having time for yourself, and that you work out 10 o'clock at night because you work till 9.
I wish I worked out at 10. I work out till 12.
Really?
Yeah.
For how long?
I'm doing it for about 6 months.
Okay.
Getting in shape for the summer. It's almost here, so now I'm going till
Well, you're looking
now I'm
good.
going till 1 a.m.
You're looking good. But
Thank
I've,
you.
I've often
So are
found,
you. So
thank you. I've
you must
often-
be working out till 3 a.m.
No. I'm a morning person. What's so interesting is people's clocks. I swim in the morning every morning because I have a reverse mortgage. I have
Reverse commute?
a pool that has the motor in it that
Oh,
you swim
great.
against the current.
Yes.
Okay.
So it's it's very neat to come into every morning. But I'm a morning person. What's your rhythm?
Mostly right now is work.
Yeah.
Like I told you before we started, I'm in the office probably 8 o'clock in the morning. I leave around 8:30.
So is that because of the processing of all these loans that are coming in, or soliciting for business? I mean, how is that? Those are very long hours.
Yeah,
for
very long
everyone.
hours. It's just you got to keep in mind when you're dealing with consumers, they're more likely to speak to you after 5 o'clock
Okay.
when they're away from work
Right.
or prior to going to work. So to be there for them is very important. Just
You make
imagine.
house calls?
Yes, we
Okay.
do. But more, I do more in referrals. I deal with a lot of realtors. I'm on the radio as well. I'm been on a couple of radio shows
He's
as
so
well.
good looking. You put him on. You're good looking
No,
too.
well, I'm on the radio, so I can't be
But
that
the
good looking.
Oh, but listen, on the radio, your voice means a lot.
Yes, correct. So the hours are very important. When someone's taking a loan, keep in mind, when they call someone, they want to make sure they reach somebody, especially the person that they're dealing with.
Yes.
You're dealing with some very private information, very private data, and when they have a question, they want it answered.
Mm-hmm.
And we value their business, so we want to make sure we're there.
And then I went to visit a house that I had owned in Melville,
Mm-hmm.
near where your office is, in Melville and Astoria. You have offices in both locations. And I went back to visit the house, and the people had put up a white picket fence.
Of course.
Oh, really?
I said, "Oh my God, how come I didn't think of that? I always wanted a house with a white picket fence." And there they had done that.
Yes.
So I guess there's still ways to explain that as people wanting a home with like a white picket fence.
Yes.
But I see that in the city, and I see that in the suburbs as well, right?
Yep.
Are you finding now that you're opening an office? What led you to open that office in Astoria?
Well, I'm a firm believer that Queens and Brooklyn is such a phenomenal area. So many opportunities for individuals. It's such a diverse area. There's no place in the world where you can go out in the streets and see 30 different nationalities, hear 60 different languages.
How about the food?
The food is phenomenal,
Yeah.
of course.
You can see as many different restaurants.
If you don't
from
become a
different cultures.
foodie in Queens or Brooklyn, then you're not really living, because
Right.
this restaurant after restaurant is just phenomenal. So it's just a great place to be. Brooklyn and Queens is it's just the place to be, I think.
So where are you living now?
Oh, I'm living in Midtown Manhattan.
Okay, well you're single, I guess. Are you
Yes,
single?
I am single.
All right, it's the home for the singles.
Yeah, definitely.
But there's a place and time for everything. I've had 7 different homes, and 7 different careers. So you find things in this place and in its time right for you. But I think, with all due respect, Manhattan's the most exciting place in the world.
It is great.
And I've traveled the world, so I mean that literally. So there's
Greatest
nothing
city
you
in the
can't
world.
find,
It definitely
right?
is.
Yeah. Do you see business being good now? Is this year looking like it's, in terms of the real estate markets, better than potentially last year?
Without a doubt. Property values are on the rise. Clients that bought their home a year ago, in certain areas are seeing up to 20% gains from when they purchased their home.
It's better than the stock
So,
market.
Yeah,
Yes.
much better.
Yeah.
A
And
little bit more tangible too.
it's the housing market is certainly recovering dramatically compared to what's been going on in the past.
Well, what's very exciting from my perspective is not only is the housing market accelerating in pricing, but the interest rates have remained low. Do you see that continuing for a period of time? What do you see, Manuel, in terms of the interest rates?
Well, I definitely think that interest rates were going to stay low for the next year minimally, due to obviously pushing up the economy is very important. Having low interest rates, it makes a loose economy, loose money, meaning it's freely, you can borrow enough and the payments will be less. So I think it's very important that the government does keep our interest rates low, and I think they will. It just flourishes the economy, and it's
I feel like they're
a
giving
fact
money
now.
to
Yeah,
you,
it's
right?
a fact, correct. Yeah, so
pretty
it's
much it.
working. It's working.
Yeah. I mean,
More
I
people
was
buying
very
homes.
excited that you said that people can actually buy homes with no money down.
Absolutely.
Yep.
Is there a particular kind of house that has to qualify?
Well, there are specific programs that have to qualify. For veterans, they could do it with no money down.
Okay.
On the conventional and FHA side, it would be anywhere from 3 to 3.5% down
But I mean,
on
is it
primary
any house at
residences.
all that would qualify in terms
Oh,
of that?
any home, yeah.
What a residential home basically consists of
Any
is
1
a
to 4
single
unit.
family or up to a 4-unit
Okay.
property. So anything between those categories, it fits. Even a manufactured home as well. We do a lot of them. There's many manufactured.
kind of home?
A manufactured home.
A
Believe it or not,
did you say that?
manufactured.
Manufactured home.
Manufactured.
Yes,
Okay,
believe it
now
or not,
you
there's a
gotta
whole bunch
explain
out east too.
What's a manufactured home?
It's a home that's built in pieces, and put on a lot. They're actually very
I
common.
used
Believe
to
it or
call
not,
it modular homes. Is that an
it's a little
old-fashioned
bit
word?
different. Yeah, a little bit.
I'm outdated.
Correct.
It's a little outdated.
Correct.
Yes.
Okay.
Correct. It's very common out east. Believe it or not, there's a lot of homes that are in the Hamptons that are manufactured homes. So
Interesting.
yes, correct.
Now, is that because they are cheaper to build? Is that why you're seeing them more? Or is
Sometimes
it,
it's cheaper. Sometimes it's quicker. It's a matter of who's doing it, of course.
yeah.
Very common in California. We're registered in 18 states, so we tend to see a lot of them in Texas, California, New York, and upstate New York, of course, too.
So I heard that if you buy an investment property, you have to put down at least 25%. Is that true? I mean, is that something that's, as an investment property that people get mortgages for those as well?
On an investment property, you usually have to put down about 20% to purchase an investment.
And if it's a multifamily, 2 to 4, then you'd have to put down
a little more.
a little bit more, 25%.
25.
But
And
in a
why is
single
that?
family, you could only put down 15% if you want to. Since we sell directly to Fannie and Freddie, Freddie allows that for 50% down, but a lot of our lenders like to have a little stricter requirements. The ideal is when you put more money down, it's safe for the bank, and the
Right.
banks want to protect themselves. But here at United, since we are direct sellers to Fannie and Freddie, we go by their guidelines, and they're a little bit looser. So you can follow their guidelines, so just 15% down for a single-family home.
Well, that's an interesting
Yes.
opportunity too, because
Yeah.
that really allows, again, people to either to invest in that, or with the market going so well, and people needing housing.
Yeah, well, a lot of people think that they can't afford that too. The best thing is when you do an investment property, qualifying for investment property is a lot easier than what people think. Because you can use future rental income to qualify to buy the home. So if you know the property is going to generate $5,000 a month, we can use around $3,700 to $3,600 of future rental income to help you qualify to purchase that home. It makes it a lot easier to buy a home.
Wow, those are a lot of different ways that you can make
Yes,
it be creative
correct.
to make it possible to own.
Yeah.
Sometimes I'm often wondering why then people don't buy rather than pay these ridiculous rents. We we run the Long Island City Flea Market every Saturday and Sunday, and they are surrounded by apartment buildings where people are paying $4,000, $5,000, $6,000 a month rent.
Because not many people
How do we
know
get
they
them
can
out
do
of
it.
that? It's
Because
the
not many
homes.
people know that they think, oh, I can't afford a mortgage, or it's just too hard. My credit score is not that great. I've heard that from friends and family members until I sit down with them and just give them 10 minutes of my time, and then they realize that they're ready. And we've done many, many homes for my friends and family, so it's great.
It's interesting too to me that in some of the neighborhoods, now I know you live in Astoria.
Correct.
And you live in the city, that there are many more rental units than there are condo or co-ops.
Correct.
And that's, something that also inhibits the ability to buy. But I think, in Astoria, where you have a lot of the homes in Brooklyn, where you have a lot of these multiple family homes, you really have opportunities for people to take advantage of that. So what is your relationship with the real estate brokers? Do they work with you or you work with them? How do you make these deals happen?
Well, we work hand in hand with them. When we're pre-qualifying somebody for a purchase, if they're not working with an agent, we'll send them to an agent that we know. If they are working with an agent and then they come to find us to help them get pre-qualified, that's another stepping stone as well for us. Because sometimes they have a hard time getting qualified at other lending institutions, and then realtors see what we could do and they refer us business from that
Well,
aspect.
I think we've learned a lot today about mortgages, reverse mortgages, regular mortgages, veterans mortgages where you can put no money down. I hope everybody is listening, and I hope to see you in our newspapers with all the details about what we've learned from our beautiful, very handsome United Mortgage Brokers. So I'm so appreciative of you both being here today, and I look forward to seeing you in the newspapers. Thank you.
Thank you for having us.
Thank you and good evening.
You need 3 more minutes? Okay.
Harps.
Okay,
Go
we have to add
harps.
3 more minutes.
What?
Harp.
What did we leave out?
Oh, there's a great product.
Okay, we're going to just take up. I'm going to ask you a question. Are there some other products that people should know about in terms of mortgages and lending?
One of the popular refinance program right now is called a HARP loan, H-A-R-P, Home Affordable Refinance Program. Now, this product helped so many individuals, close to 3.6 million, and then right now there's still 4 million loans out there that still need help. If your house is worth less than what you owe, you're still able, you might be able to refinance out of those higher interest rates. People think that they can't refinance even if they owe more than what their house is worth, and that's not the case. Yes.
So how is that application process done? What do people look at? They look at, how do they get an appraisal to know
well-
what the value is?
Actually, I'll step in here.
Yeah.
A lot of times on these HARP loans, if they're owner-occupied 1 to 2 family units, we actually get appraisal waivers where the home wouldn't have to be appraised, and then your agency, Fannie Mae or Freddie Mac, will give you a value on it based upon that. But honestly, we could lend up to, your house could be worth $150,000 and you owe $300,000, and you could still qualify for that loan without even appraising your home to refinance into a lower interest rate. Also, this is a very good product for people that are self-employed that don't show a lot of income that are already in these agencies, because they have expanded income criteria where you could, in some cases, show very little income at this point. But as long as you're making your mortgage payment and you're backed by either Fannie Mae or Freddie Mac, you could still be eligible to refinance.
Interesting.
Yeah.
So, when you had this whole bubble with the problem with those mortgages, how is this protecting people that they don't have those problems again with mortgages?
Well, I think it's helping them a lot. People or the individuals or the borrowers who are in those loans, if they're paying their mortgage on time with a high interest rate, of course we're going to help them out and lower those payments.
I think that's a very important thing to repeat.
Of course we will.
They're paying their mortgages on time.
Yes.
I think sometimes people forget that probably that's the first thing you should pay.
Of course,
If you
absolutely.
have choices and
Exactly.
have to make choices of where the money's
That
going
is
to go
correct.
this month. That's a critical piece, because it sounds like if you do pay your mortgage on time, you will be eligible for opportunities like this to help you.
Correct. As long as Fannie or
Exactly.
Freddie owns the home, we're able to help. We did an investment property that the borrower owed $430,000, and the house came appraised at $120,000, and we still helped them
Wow.
out. And that was only an 8-day process.
Well, I want to thank you both for coming today and giving us such valuable information. So, United Brokers, come to the rescue. Thank
We
you.
always do.
See you in the newspapers.
Thank you.
Have a good evening, everyone.